With this weekend opening the NFL season, what better way to kick off this month's housing report? This year we've seen rates hit a 23-year high, dip slightly, and then inch back up again. The housing market has been slowed from its insane pace, and now homes are taking, a little longer to sell. We're going to dive deeper than this and give you a clearer picture of what's really happening in the OC housing market. It's Christopher and Brooks Marr with MMG Real Estate Advisors, local Orange County realtors, and we're back with another OC market report for September 2023. Home affordability has been impacted most by rising mortgage rates, which surged from 3.25% in January 2022 to over 7% in October-November of 2022, while rates briefly eased to 5.99% in February of 2023. They continued to climb, reaching 7.49% in August, the highest in nearly 23 years. This has made it increasingly difficult for potential buyers to afford homes, even as demand remains relatively strong, primarily because of low inventory. The expected market time in Orange County hit a low of 37 days in April. As mortgage rates increased, demand stayed flat and inventory grew. By August, with rates nearing 7.5%, the market time had extended to 49 days, adding nearly 2 weeks of market time. Southern California has an expected market time of 65 days, still indicating a hot but evolving market. Sellers must carefully price their homes and consider buyers' concerns in this high mortgage rate environment. Initially, experts expected mortgage rates to drop near 6% by the end of 2023. But the rising rates have prompted them to revise their outlook. The strong U.S. economy, with no recession really in sight, robust consumer spending, and a resilient job market suggest rates will likely remain higher than expected in 2024. Mortgage rates may only decline when there's evidence of a cooling economy and inflation begins to trend downward towards the Fed's target rate of 2%. Until then, expect rates to bounce around the 6 to 7% range, with subdued demand and gradual slowing in market times, necessitating a strategic approach for sellers in the housing market. In the continued spirit of opening weekend for the NFL, I'm going to toss this over to Brooks.
Now, let's turn our focus to the active inventory here in Orange County. The active housing inventory has decreased by 49 homes in the last 2 weeks, marking a 2% decline and leaving it at 2,385 homes, the lowest since July. Interestingly, this year's inventory is higher than that of the same period in 2021, which was the lowest recorded since tracking began in 2004. The peak inventory for 2023 was reached in August at 2,475 homes, the lowest peak in recent tracking history. Expect the inventory to gradually decrease and closely resemble the pattern from 2021, with a significant drop during the holiday season, potentially leading to a record low number of available homes at the beginning of 2024. Homeowners are staying put due to their low fixed rate mortgages, leading to a reduced number of homes on the market. In August, only 2,170 new sellers entered the Orange County market, which is 39% less than the 3-year average before COVID, 2017 to 2019, and contributes to the ongoing shortage of available homes. Current demand, however, measured by the number of new pending sales in the past month, has experienced a significant decline, dropping from 1,576 to 1,465 in the last couple of weeks, representing a 7% decrease. This decline is the most significant drop seen this year and is linked to mortgage rates reaching nearly 7.5% on August 22nd. Higher rates are causing fewer buyers to qualify for home purchases. The trend of diminishing demand is expected to continue gradually, with a more substantial drop during the holiday season, spanning from mid-November to the end of the year. So why is this important to know as a buyer or a seller? The decrease in demand outpaces the decrease in supply and has led to an increase in the expected market time, which measures the number of days it takes to sell all Orange County listings at the current buying pace. This figure has risen from 46 to 49 days in the past couple of weeks, marking its highest level since the beginning of February. Notably, last year's expected market time was 61 days, indicating a slower market than today. The pre-COVID 3-year average was 82 days, considerably slower than the current market pace. So, for the buyers out there, your options will be limited, as there just isn't a lot of inventory, but Your competition will also be less, and for sellers, with such limited homes available, your home has a higher chance of getting quality looks when it is priced competitively against other similar homes. Like I said, the expected market time is for all Orange County listings is 49 days. That is still a hot seller's market. And now lastly, the luxury market. The luxury housing inventory, homes priced above $2 million, saw a minimal decrease from 794 to 792 homes. Luxury demand, however, experienced a more significant decline of 26 pending sales, representing a 13% decrease and reaching its lowest point since the end of March. This drop in demand, totaling a 21% decrease, aligns with the expectation that the Federal Reserve will maintain higher mortgage rates. Consequently, the expected market time for luxury homes above $2 million increased from 122 to 140 days, up 110 days from just 4 weeks ago. We advise luxury home sellers to approach the market strategically, regardless of the perception that the lower priced housing market is extremely active. For homes priced between $2 million and $4 million, the expected market time over the past 2 weeks has risen from 82 to 96 days. In the $4 million to $6 million price range, the expected market time increased from 177 to 257 days. However, for homes priced above $6 million, the expected market time decreased from 378 to 310 days. A seller in this range should expect to enter escrow around July of 2024 with a 310-day market time. And now, I'm going to take this, pass it back to Chris.
And that wraps our Orange County market report for September 2023. If you have any questions about anything said in this video or something you read online, feel free to drop us a comment or give us a call, text, or shoot us an email. We would be happy to help in any way we can and be a resource you can rely on. If you feel there is someone you know that can benefit from this information, give it a share. And until next time, thanks for watching, and we'll see you on the next video.